So I made about $3,000 day trading Tesla today, and in this video, I want to break down where I got in, where I got out, my whole game plan, and just a breakdown of the charts. So with that being said, let's dive right in. So as I mentioned today, I had two trades. Both of the trades were Tesla. One trade I made about 20%. The other trade I made 2%. This wasn't really a great trade. I'll dive into that. But this was the first trade of the day. Now, before we go into the trade, I want to break down my whole game plan, what I was looking at, just so you guys have a clear understanding of what I was looking at, right? So let's go into my pre-market notes. So my pre-market plan today, we got PPI data, which was negative, and we got a negative reaction from the market. All my levels were below yesterday's inflection point, and I was looking for a short on the open around my inflection point. So I was aiming for a quick trade, and I'll walk you guys through my thought process on that. Now, one stock that I heavily focused on for today and I really paid attention to was Tesla. My inflection point for Tesla was 707 and 710, right? Those are the levels. It was a singular focus for the day. I was just focusing on one trade or one stock. I was paying attention to the opening move. I told myself, have orders ready and be ready to execute on a reject if we get one. And if we don't see a reject level, wait for a morning hold or morning top rejection. Now, when I build my game plan, what I like to do is I don't like to make an assumption of what I think will happen. I like to have inflection points, right? And around those inflection points, I want to understand that this is the key inflection point, and I'll show you guys in a bit. And if the stock gets there, depending on how we respond or how the stock responds, I will take the trade based off that. I think when you create a plan such as I'm going to short the market because the market's going to dump, you start having a bias towards the day, and that kind of messes you up, right? So that's like the whole game plan aspect. So now going into the trade, right? Let's just go into the trade and take a look. So this was the first trade, put about 14 grand, made about 20% on the trade, right? And I'll go over the setups and everything as well too. So let's go over the pre-market action. So first, we look at SPY. So I told you data points came out today, huge move for the market. Once the data point came out, you guys can see, looking at the overall market, we did start going below yesterday's level in the pre-market. So looking at pre-market, SPY, QQQ, a lot of names like Tesla and so on, started going below yesterday's inflection point. So this orange line for me is yesterday's main inflection point, which was 374. You guys can see on SPY, we're below 374. You guys go to my main name that I'm watching for the day, Tesla, right, also was below yesterday's inflection point that I had. And yesterday's inflection point I had was around 710 to 707. I don't like having exact number. I like having a range. So that 707, 710, as I mentioned, was my inflection point. So that is where I started paying attention to Tesla pre-market. So when I see it pre-market, we're all the way to 700. And now I start creating a game plan. Now, how do I go about creating my game plan? So as I mentioned, I like to have my levels. I like to have a good understanding of the sentiment for the market. The sentiment for the market on the open was bearish, right? Obviously, that can change, that can adjust. I could be wrong as well, but I'm going off the assumption that we have a bearish sentiment. Now, that sentiment, as I mentioned, can possibly change, and I could be wrong. So what do I start looking for? I start looking for real levels. So for me, like I said, the 710 is a key inflection point, right? This 692 is a key inflection point. Then obviously we have mid zones. The 700 obviously plays a key level, but these are my two main inflection points. And looking at Tesla today, that's the two inflection points we kind of hung around, right? Now, my game plan, as I mentioned, was to see if we see any reject level or hold on Tesla. So when I went into the day, I'm either looking for a rejection here. If I see a rejection, I take a trade. If we don't see a rejection, we start seeing a hold. Now I start seeing, do we have buying pressure? Is the market's momentum bullish? If it is bullish, I start seeing, are we able to bounce out of this area with strong momentum? Sometimes what we may see, we may break out of this area a little bit and start getting a flush after. Very similar to what we saw here. So as a trader, make sure, guys, that you guys have an open mind. You guys are not going in with, oh, I'm going to short or I'm going to go long, right? Have an open mind in terms of how will you respond if X, Y, and Z happen. So with me, how will I respond if we see a rejection at 710? I will buy puts. Basically, I will short this stock, right? So that's what I did. So right on the open, right, I took about 20 contracts, right? I traded the 690 puts a little bit out of the money. I wish if I could go back, I wish I touched the 700s. That was the only thing. I wish my strike selection, I wish was better. So what I'll do here, bad strike selection, right? something I need to work on. I wish I was at 700. But anyways, I got in my strike selection at 710 for 20 contracts, right? Around 23 seconds on the open. Now, the reason I got in 23 seconds on the open, and a lot of times I always say I wait for a minute or two for, some confirmation. The confirmation did come in on the second candle, but the moment I saw a rejection, I did not hesitate. I executed. A part of me wishes I waited. Long-term wise, it makes more sense to wait, get the real confirmation, get in on the second candle. But I think I was a little bit more confident, and that caused me to, execute on that trade. Now, with being a little bit more confident, I also should have made more money, like 20%, great, but I did leave a lot of money on the table for this trade. I'll talk about that too. So I take 20 contracts at 710. About a minute later at 9:31, right, I scale 10 out at 840, made $1,300 on that, and then I scaled another 10 out at 860, right? Now, looks cool on paper, but when I really go to the trade, we got the huge rejection. We break the 701. We're unable to hold the 700 level, right? And when I go to a cleaner chart, these are the charts I look at, guys. That was just with pre-market data. Let me kind of get off that and not, confuse people. But here's a cleaner chart. So, I start seeing this action. I start seeing this rejection zone. Once I start seeing this rejection zone, my real game plan, I sold here. I had no business selling here. We didn't even get close to my, bounce zone. We didn't even get close to that area. Even on the third minute, we got another rejection at 7-3, showcasing continuation. Now, these premiums, right, this premium right here went to about $14, right? Let's just say I hit my $12 profit target, which it went to. I potentially left off, a 10K day or 10K trade or 8R trade, right? A trade where I made about 8 times what I risked, which was $1,200 because I sold early, right? Even in mistakes that I selected, I sold early, and I'll walk you through why I've sold early. If you have been following my journey on Twitter or on YouTube or on Instagram, I kind of talk about it. Having a little hard time in the past couple of months or past this year, I've been having a real hard time with trading. So the moment I start seeing green, I start taking profit off the table. But overall, going into the trade, and this is what we need to work on as traders, we need to talk about things we did right so we can continue it. And then we need to focus on things we did wrong so we kind of stop it, right? So things I did right, once again, I got in at a good rejection point. Maybe I could have waited until the second candle and had an entry here. The bad thing I did is I sold way too early. The real scale out in this trade was maybe around this break. This was where the real scale out was. And even at a scale out at this level, the premiums for this trade went to about 11, maybe $12, right? If you go check the 690 puts, you'll see that. So this would have been, and I'm not trying to play the would have been, could have been game. And that's not the whole idea that I want to, implement with you guys. The whole idea I'm trying to share is how do I maximize a trade, right? So if I don't focus on these could have been, would have been, I don't get better, right? I let go of this trade. I'm not stuck with, oh my God, I could have made 10,000. No, I made that mistake on this trade, right? I did it on the previous trade too, but what do I do moving forward? Now, one thing I did do this trade that I'm happy about is I scaled out. But after my first scale out, I scaled out again right after. And I think the crazy fluctuation in premium, and that's where the price, the strike selection kicks in, that threw me off a little bit because these premiums were really fluctuating. Spreads got extreme. Made things a little bit harder. And just mentally, I was like, you know what? I'm having a 3K day or 3K trade. Just take it. Haven't been having the most consistency in my trading lately. Here you go. This is my trading progress so far for this month. Haven't been having the best, right? So mentally, it is a mental barrier where you see that big day and you're like, okay, it's a big day for me in the past 2-3 weeks. I'm a little hesitant. Take the profit, take the trade, exit. So I did that. Now, obviously, after I did that, the second trade kicked in. Same thing with the second trade at 9:36. Took about 5 contracts. I cut my size down because I was like, I don't want to feel like I'm biased. So at 9:35, right here, I took 5 contracts. I took 5 contracts because I kept seeing we're rejecting around the 700 levels consistently. So I'm like, hey, we're rejecting. I'm going to play this rejection, and I'm going to see a continuation towards the downside. Now, in realism, right, you look at the trade, made about $171. Good and bad trade. I'll tell you why. I played kind of the low of the day in a continuation sell-off, and also the setup wasn't really there because we're also going very close to the 692 area, which was my main inflection point for a bounce. So first to break through that, especially after having a big leg down, the probability goes down in my opinion. So I don't think the trade should have been there. I think the real trade should have been on a rejection at 701 after hitting 690s. I think that's where I should have looked to take a short position, but I got in too early, and that getting in too early came from me leaving money on the table because, hey, I got in here, I got out there, I missed this trade, and mentally I'm like, wow, that was a $10,000 trade. Like, I was in that trade. Like, it was a 2-minute more hold, and because I sold it way too early, and here I am kind of like in a tough situation, which caused this, I don't want to say bad trade, but it caused kind of a rush trade, and, I also had a late entry. Now, the cool thing about this trade was, despite all of that, I was able to quickly read and recognize my mistake in real time. And I think as traders, you want to be able to recognize your mistakes in real time, recognize what you're doing wrong immediately, and react off that. So when I seen that, hey, we're going close to an inflection point, I'm not seeing R vol, the relative volume, pick up crazy. I'm not seeing insane amount of momentum on this. Let me be a little bit cautious here. Let me just scale out, even though it's 5 contracts based on my other size, I'm really cut down. Let me just exit. Let me just stay flat, and let this trade kind of formulate more action before I stick through it. So I did that. So if you guys take a look at 938, right here, I think, right here, 938, I start saying, you know what, I'm going to get out. I was able to recognize we are at an inflection point. I was able to recognize that this downside move looks exhausted, so I don't want to get caught up in a reversal. Even though if I held this trade, it would have made me money, but that's not the way to trade. That's not the way I trade. That's not the way I want to implement habits and strategies within my trading style. So for me, it's like, I'd rather get out here. Even if it keeps going down, the trade doesn't make sense to me. It's exhausted. I'd rather be flat and take the trade. So on paper, this looks like, wow, you had a 0.2R trade. But in realism, I exited before a reversal. I'd rather have a trade where I exited before a reversal and have a 0.1 trade or even be flat than to hit my risk amount, right? A lot of traders don't recognize it. A lot of traders are like, well, because I placed the $800 risk in the trade, either I hit the $800 risk or either I make $1,600. No. From someone whose job it is to manage a trade, sometimes it's better to reassess the trade and be like, hey, I'd rather take the $100 or I'd rather be flat for the day than to hit my risk amount because a trade now doesn't make sense. And when you look at the trade, look at that. We bounced very well after having an overextended move, right? We had a 20-point move, a 20-point sell-off on the open, rejected, right, on the downside basically, came back to the 700 level that we had a hard inflection point of breaking, and then continued with a little bit of a shakeout sell-off, if you want to call it, right? So that was my trading day for the day. 2 trades, right? Tougher day as well. Like a little bit harder, but I do wish, once again, I wish I held the trade more. I wish I scaled out a little bit better. I gave myself timing for the scaling out. And like I said, the struggle I'm in currently at this moment, and, when we come back to this video in 5 months or 6 months or even 2 months or a month from now, you guys will see the development, right? And that's why I want to share this. I understand there's going to be people like, oh my God, he can't trade this market and all that stuff. And I understand, right? Those things will happen, especially when you're out there, right? But I want to show you guys, like, what I'm kind of going through now, I've went through before. It's not the first time, right? There's many reasons which I would have to make like a whole separate video about. It's not anything new. It's just making adjustments to it. It's just staying alive in the game while things are happening, right? It's not trying to now go have a 50K day with the expense of risking 20,000 or 15,000. And if I have 2, 3, 4, 5 back-to-back 10, 15K losses, I have a massive drawdown. I'm not in that position. The position I'm in is stay alive, build that momentum, build that confidence, make the mistakes, fix the mistakes, keep doing the things that I'm doing right, and let the good days come to me. Like I said, this would have been that 10K day. Didn't happen. It'll come tomorrow. It'll come next week, whenever it is, whenever the market presents itself or presents an opportunity. My job is to show up, and that is it. Hope you guys enjoyed that video, and yeah, thank you guys.